day, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this wrap-up is for Tuesday, November 16th, 2021. Now, before we get any further, we're going to have a live webinar this coming Thursday, November 18th, 12:30 p.m. Central Time. If you haven't gotten an invite from me on it, it's simple. To go and sign up for the webinar, and it is free. You come in, just click at the very top of your page as you're watching this. An icon will appear. Fill out the form. It'll come out there. You're signed up. Make sure you put it into your calendar. It all's automated, and away you go to even remind you when the webinar is going to begin. It lasts 20 minutes, so I'm not taking up a lot of your time. If you have SPDR or ETF questions, when you sign up and you get the response with your user ID and password, look at my email address within the body of the letter. Write me the questions you have. Give me a chance on SPDRs, ETFs, and stocks to create the charts for you, okay? There's so many of them, you can't possibly expect that I could create each one on the fly and put all the indicators where I want them to be. I can create the charts like that if you give me the symbol, but I'm not going to get necessarily everything you want in terms of the right window envelopes and all on it. I won't even show those because I couldn't possibly do them that fast. All right. So President Biden today said that the odds are very good that he's going to, within 4 days, tell us now who he's picking to be the head of the Fed. I hope he uses that stage to fill the other slots that are open. He could really put his handprint all over the Fed by doing that. I wrote in tonight's report how few differences there are between Fed Chair Powell and Lionel Brainerd. You know, if you put them into a jar, you really got to split hairs to find differences. She is of the opinion, as of September 27th in a panel discussion, that inflation is still transitory. So is he. Whether you agree with that or not, I get so many letters off YouTube with people writing me, and I write back most people, their thoughts on what it is, and I get it. I go to the store, I see the same higher prices you do. But I also understand durable goods make up a big part of this. They're not necessarily going to rise as much as you think. Once we get to the point where the supply shortages and the supply chain gets full, what happens? I write tonight in my full research report for my subscribers about what's going on in the Port of Los Angeles, how magically there's a backlog of containers now that have to go back to Asia. You know why? Because they're due to start charging fines. And the truckers, the container ship people, everybody for not moving this stuff out of these yards quick enough. Money's a magical thing as to how it can all get done. That doesn't change that we still have a record amount of ships waiting to take their goods off. But as you clean up the yards where this all happens, you can take in more product, and magically it starts whittling down. Amazing. Tesla. I don't know if it's going to be able to fill this gap. Elon Musk sold another $1 billion worth of his stock because he's exercising options. Now remember, he sells stock, gives up stock, gets money to pay the government and whatever else he does with the spare change, but then he gets these options that he exercises, right? And he gets the stock back. At the end of the day, I'd love to know when somebody does this analysis, does he end up with less or more stock once the current round of options that can be exercised and do get exercised, what that means for him. But it certainly is not going to hurt his wealth. Yes, this drop did. You can count on it, but is it temporary? Don't know. Speaking of Tesla, tomorrow you're going to see the airwaves full of GM opening its first fully devoted plant to electric cars. So that'll be all over the news tomorrow. At the same time, a negative is that in Illinois, the Belvedere plant that makes Jeep Cherokees, it has to go into furlough again because of chip shortages, 400 people without jobs. When we look at this, the trend is still down. It's been a heck of a correction. You've gone from roughly 1250 to roughly $978.60. So you've had a $220, $230 drop in the market. Pretty sizable. I think you'd agree with that. But it's not because of anything wrong with Tesla. It's because the main owner dumped so much stock The market's under the 18-day average. If it rallies back, I'd expect the first resistance around 1091.50. The trend is down, as you can see here, and momentum, we're oversold. So it's due to an event we understand. What happens when he stops selling? Does that mean the market goes back to the highs? That'll be the question. In Apple, as I told you yesterday, I think you're now caught in the sideways action, as we call this. The Bollinger Bands have gone sideways. It's almost like a pipe. And in the pipe, price is a spring, and it's winding itself up. And it bounces from the high to the bottom as it hits the top of the pipe, the bottom, but it's building power for a move. Is that going to be a breakout for Christmas time? I don't know. In ARC, you fell back to the lower band. I expected to see support there. The shorts come out of their markets, and I think we're right on the money. There is no trend in this chart. You have a market with a higher high and lower low. It's trying to work out of an oversold condition. It got underneath, again, key averages, the 200, the 18, and the 100-day in green, the 18 and the 200-day moving average. So there'll be resistance on the way back up. In the industrial sector, Spider, you're knocking on the door of the upper Bollinger Band and you're overbought. If you don't understand this formation and what happens when you get there and you lose an embedded reading, take my enhanced Bollinger Band course. Inexpensive. Hours of video. I think there's, how many? It's probably an hour or so. And you're going to learn something that you haven't seen before in this. And I think you'll walk away going, I learned something. People always ask me, why are my slow stochastic numbers not necessarily the same as theirs, by the way? I use a different way within them of doing it. I will tell my subscribers, my paid subscribers, what it is. I don't give it to the general public. I could, and then you'd make it better and you'd follow me better. But hey, I'm an entrepreneur. Higher lows, higher highs, I'm looking for up here, the 254 level. In a CNBS, I always want to call it CNBC, you got up to the upper Bollinger Band. Game over. You're overbought. You get up there. That's where the pros take money off the table. That doesn't mean you're bearish. That's where money comes off the table. And if you can work away from being overbought, money starts buying until you break the pattern by getting under 1802. You still have higher highs, higher lows, and you're no longer overbought. In the home builders, we get some house numbers tomorrow, so you probably want to see what they are. But this chart's just locked in and zeroed in on the upper Bollinger Band. That's not bearish. That's bullish as can be when you're embedded. Until it's over, it ain't over. XLE, this is like Apple. You're caught in that narrow band, the pipe, where you're spinning. So you go to the upper part, you go to the lower part, you get chopped. And you know what this makes traders do? They decide to become wise guys, and instead of trading with a trend, they're going to sell the rally, they're going to buy the break. In other words, they're going to pick a bottom, they're going to pick a top, and that's when you get annihilated. I've seen this my whole career of trading. These setups get you to do all the wrong things. What I teach traders to do in my enhanced course is walk away. Go to another chart. You don't think you got enough between stocks, spiders, and ETFs? What's wrong with you? You don't trade that pattern. In the emerging markets, you're up to the first key resistance. You haven't been back to this 100-day average in a while. The market is bullish. It's gotten itself overbought. Between here and the upper band is the resistance. It doesn't have to go up there. It could easily fall back to that 18-day average. But as long as you don't get under 50.86 again, I'd be jumping up and down. This looks to me like a market that has potential to the upside. In gold, what do you do with the upper Bollinger Band up here? If you don't know, I'm amazed. You finally embedded, watch this, overbought at the upper Bollinger Band. So I think the pros came out here. I don't want you to think that I think they came out there. That's where I think the right thing to do, if they were long. I don't see a way they got long other than just picking a bottom, and I couldn't have done that. And the market now churning against that number. But in the process, what do you think it's doing? You've got both numbers over 80, both numbers over 80, both numbers over 80, both numbers over 80, and over 80. It's embedded. Unfortunately, the pattern, the way that it keeps going up, hasn't let the way I teach to play this come in. Again, that's that enhanced Bollinger Band course. Hope you decide to take it. We'll show you something at the end of this video about it. In the gold miners, no, you don't want to be long. This is where the market is at the upper band. You're not embedded. Be careful. You also just now had a big outside day to the downside. You could easily go back and be playing at that 200-day average before you know what's going on. Copper should fail up here temporarily, and that's what it's doing. It is the first test of the 100, 200, and the 18-day average of closes. So failing at it, so common. Clear that number again, then you get excited. But the first test normally fails. TLT. Lower highs, lower lows, could make it down here, but the odds aren't strong for it. Why? You're already very oversold. That's not to say you couldn't embed, and if you do, I would be looking for lower numbers, but you don't always embed. So you pay attention to how the market has used its strength to create a downtrend, and is it running out of it? Remember, not all of us get the pills where you see these ball players, one of them, the ex-Sox, takes these manly pills that they're going to make his testosterone levels and all this go. Sure. That's what it needs. It needs the pill. FXE, what a time to go to Europe. You know, darn it, it's wintertime, and darn it, COVID's spreading like mad there. A lot of people didn't get vaccinated. America's unique. We have plenty of vaccines. A lot of people don't want to get vaccinated, and that's what's filling the hospitals. The people that get COVID, most of them get it. They don't have to go to a hospital, and God help us, they're not dying. And that's the important thing. The vaccine is working. What it means 5 years from now, from us putting this in our body, I don't know. I know as much as you know. I know that right now, I want to make it that next 5 years, so that's why you get vaccinated, I guess, or guys like me do. And as you can see, you're building momentum. Are you embedded? Well, let's take today. Both numbers were under here, 20. Both numbers under 20. Let's go one more day, under 20. You're fully embedded. So until the red line gets over 21 on a close, I contend on sharp rallies. Sharp. I want you to listen to that word, not back to the Bollinger Band. Sharp rallies. I think the pros are waiting to sell it. Otherwise, they'll go, I have better things to do on a better pattern elsewhere. I'm Ira Epstein. Take a look at this. And remember, you can click up here at any time to get into the invite for my chat room come this Wednesday. Take care now. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.